Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday. It is the 25th of April. It is also the NFL Draft, one of my personal favorite days of the year. I plan on wrapping up with you guys, and I will be pretty worthless for the rest of the afternoon going into the evening. But before we get there, we, of course, have some work to do. And hey, Tanner, good to see you, my friend, and welcome out, everybody. I hope you all had a good day both in and out of the market. Another, broadly speaking, fairly not much of a mover, in the broad markets here today. But of course, when you're in earnings season, you're seeing plenty of individual components moving around, right? Facebook's gapping up, 3M's gapping down. So all sorts of crazy moves on individual stocks, and that is earnings season for us, right? So taking a look at just quickly the heat map here, notably a little bit of that rally over in healthcare kind of continues. Doesn't look like the bears are quite ready to take another shot just yet over there. You saw some selling in the industrials, material sector, as well as you saw, industrials kind of got hit hard with 3M, UPS, Illinois Tool Works, I believe it was. A lot of them a little bit disappointing. And our ETF's kind of in an interesting spot. I don't know what that means, but we'll see when we get there. Of course, Facebook having a nice earnings beat, Microsoft a nice little response to its earnings. So definitely an earnings type of a day in the market. And to illustrate that point, looking just at the S&P 500. And good afternoon, everybody. Hey, Ed. Hey, Patricia. Hi, Amy. Good to see you. We have X-Links, down 17%. On earnings, just not working out. 3M, just a pretty bad report in my mind. FCX, Iron Mountain, UPS, we're seeing huge percentages on these individual components to the downside. But if you flip it the other way, Cincinnati Financial had a really good report and a great response. Facebook, I'm sure as everyone knows, gap up on the open and just kind of hung around from that point. Lam Research, Hershey's, Fortune Brands, Alexion, all had some decent earnings. Of course, Microsoft. So, when we look at the individual components and then you head on over to the actual index chart, doesn't really seem like, wow, that's all that happened here today. Of course, we have another big round of earnings. And hi, Marie, good to see you coming out tonight or before the market opens. Probably 40-ish S&P 500 companies before the bell tomorrow morning. Of note tonight, you've got Amazon and Intel and Starbucks, probably the big ones here tonight reporting. And then tomorrow, probably the biggest names are going to be your Exxon and your Chevron as we kind of get into energy earnings. So we are still right in the middle of earnings season. We got another pretty heavy week, and then we'll start to simmer down. But it has definitely kept us on our toes, no doubt. It's been a fun one. Over on the S&P 500, really not much to say here. Continuing to battle just below resistance, testing that 9 exponential moving average today, but really not a lot to see, I don't think, from where we really have spent, yesterday and the close on Tuesday. We did see a little bit of movement today, but maybe these earnings tomorrow can push us one way or the other. We will have to see. On a support level, not a lot has changed, really. I'm looking at that 20 SMA. And hey, Matthias, good to see you, buddy. I'm looking at that 20 SMA probably as the primary level of support, but really anything in that 2875 range will be kind of my first level of support on the S&P 500. The Dow took, had a little bit of a rougher day with 3M missing earnings. And that was a big miss and a lot of movement, but rallied a little bit. Closing still very similar off of the lows, still a lower high, lower low type of a candle. Hasn't broke support or anything like that. So again, we're kind of in that sideways drift down limbo, right, where the trends are still intact. Most of our moving averages are still holding up in these broad indexes, and just not ready to push through that resistance, at least not yet. And we'll see. We have one day left this week. I don't think it's going to happen tomorrow, but you never know. That's for darn sure. A little more selling over in the NASDAQ today. Nothing crazy or anything like that, as it continues to just be an absolute rock star. I mean, when you have a red day and that's as bad as you've behaved for a long, long time, we're not going to complain too terribly much. Still above all of the moving averages and hitting those highs. So things are continuing to look very good overall, but a little more selling here today. I really hope this selling kind of translates into tomorrow to create us some potential retracements for next week. The week's almost over, as crazy as that is. It always goes by fast. So it always seems like it's Thursday, I guess, but we'll have to see. I don't want to bet against the NASDAQ, that's for sure. And hey, Lloyd, good to see you, buddy, and good morning to you. Over in the rut, a little bit of interesting development maybe going on here. Of course, many of us at Tackle Trading are big fans of the cash flow condor on the rut, so we love it when this is going on, right? When not a whole lot of movement one way or the other. But we're really starting to develop that top, which is, we've talked before, for me is at 1605. I know other traders are calling it 16, but I'm a little pickier, I guess, or a little more paranoid, maybe is a better way to put it. I don't know. But we also, after that nice movement that we saw off of those lows, off of all those moving averages, I think we're kind of developing a nice little trading range where we can say, yeah, it might take some time, but a break either way is probably a decent little short-term signal. Now, we've been pretty sideways on the rut for a while now, so probably I should expect a little bit more of the same. But I do think the longer we're in this range, the more we can kind of be thinking, if we do push out, and eventually we will, hopefully not anytime soon. I am perfectly happy with the rut staying between 1560 and 1600 forever, if that's what it would like to do. Hey, Marcelo and Marie, I know you agree with me there. So, but we'll have to see how long we're going to stay in there. But I do think we're starting to develop into a, little pretty, identifiable, if you will, sideways little pattern here in the shorter term. So again, you look at the indexes, and really, if you can see something dramatically different than I do off of yesterday, my hat's off to you. You might be right. I'm just not seeing it. Looks like a little bit more of the same battle at resistance. When we get into our sectors a little bit, maybe a little bit more interesting things going on. XLB continuing that pullback. It looked like we were going to get that shallow pullback on Tuesday. More downward movement here today. Doesn't really concern me. As a matter of fact, I'm pretty excited about it potentially. This old resistance, this 50-day moving average, this to me is a pretty enticing price point from a buying perspective. My only concerns, and this is a little bit more in the industrial sector, is earnings haven't been great in these areas. Now, does that necessarily mean anything? No, but I would say the industrial sector has been the most disappointing to me on an earnings level thus far. I know we still have some time, but been a little bit disappointing, a little disappointing over in materials in my mind as well. But as long as, technically is what I always want to focus on, because who knows if my evaluation of those reports is right or not, right? I'm certainly not an economist, and that's why I love technical analysis and charting, because, well, the charts are smarter than me. And at least in my mind on XLB here, we don't have those signals yet. I don't see really any scenario, at least broadly speaking, a bunch of exciting bullish trades setting up in this sector tomorrow. But if we can kind of settle into this breakout point, to this rising 50-day moving average, see some signals on the intraday, some turnaround candles, something like that, could be very interesting. From a turnaround, I'm worried, at least a little bit worried from a bullish point of view. The break of the 50 would be a little bit of a cause of concern. Probably not enough to, broadly speaking, get me bearish. I don't think, I think we have to respect this previous swing low. And a deeper pullback than the 50 would be a little bit weaker than I'd like to see, but I don't think that would mean it was a clear bearish signal for anything other than very, very short term. So I think this is a pretty important price point that we are approaching. I hope when we talk tomorrow, it's a hammer on that, or a little doji on that, because that will probably make for some interesting candidates on the bullish side going into next week. Over in energy, continues just to kind of hang around, not really doing anything right, not really doing anything wrong. We've got some, energy earnings coming up later this week and then next week as well. So maybe that can kickstart us. Really, for me, primarily it's kind of the 50 and the 200 at this point in time as support and resistance, as we've talked about a lot, as you guys have seen without my help. Very rocky ride. It's continued to work up, this last little while overall, but has just not been very smooth sailing along the way. I guess maybe these earnings can, just put us out of our misery and break us down and start looking at it from that perspective. I guess that we shouldn't complain too much. It's not really done anything wrong, but I think we can kind of look, at these averages. Of course, that weekly 200 is right in here as well. I still really do believe if we can power through this, that it's going to be a nice little short-term bullish signal for us. I remain bullish on it personally. We'll see where those earnings take us here going into tomorrow. Maybe that can sway it one way or the other. Probably depending on you. We really tried to break out in the financials here today. I don't know that you can quite say it. I definitely think we need at least a little bit of upward follow through here tomorrow to confirm it as a break. It's very, very close. If nothing else, as Matt likes to say, it is playing defense at a pretty easy, in my mind, to identify level of resistance, across the board on so many things in the sector after, kind of that scary little short-term, banking breakdown of last, of a few weeks back, really is holding its own. And I really do believe it wants to break. I also believe it might need one of the indexes to break to get what it needs. We'll have to see if that's true or not, but we're hanging right at resistance. That 9 EMA is starting to get awful close to that resistance. So one of two things is going to happen in the very near future. We're either going to push through resistance, or we're going to slip below that 9 EMA, which might prompt at least a little bit of short-term selling, presenting some pullback opportunities. But as of today, just continues to fight at resistance. I do have to, I do think you have to respect how strong it has been in the face of all that resistance. Personally, I really like a break if it happens. I'm not sold yet that it's happened yet, but boy, it looks like it wants to do its best. Probably the most interesting chart technically is going to be the industrial sector ETF here today, working right back into that 77 ballpark that we've all seen, many, many times. That's also about where that trend line is, about where that rising 20-day moving average is. This should be a tempting price, just technically speaking, for the buyers. The issue is, we have some things that aren't looking all that hot, and some of the bigger names. You've got CAT that, a little bit disappointing movement on its earnings. Of course, you don't know disappointing if you're CAT. If you look at UPS, really tremendous, selling here today. Although interestingly, while I would never trust it, we did kind of close right at that support zone. So maybe that can tempt somebody braver than me. The big one, though, of course, is 3M, and they gap down on that open on basically a miss across the board. If you can say, what does a bad earnings report look like? At least for me, it's what 3M's earnings report looked like. I mean, basically nothing to but, nothing. Yeah, that was bad. But there really wasn't much, I don't think, to be terribly positive about. Big, component of the industrial sector. Of course, 3M is not small. This is, of course, why, I don't hold swing trades through earnings. A few weeks ago, we're looking at this on a nice little pullback, running it, having a nice little run in a great trend, ton of strength. Today, well, that's a long time ago, right? So, and it's certainly very far away from a price perspective. So this is why I will never hold a swing trade through earnings, whether I should or shouldn't. I never will, and I'll never regret that. So we are seeing some weakness on the individual charts. Let's actually sneak into here and look at some of these other stocks. I mean, those are really the ugly ones, and some of them are still holding up all right. Boeing, while I have no interest in trading, it is still kind of just churning along, not really doing much one way or the other. The railroads, of course, most of them broke out off of earnings last week. They still look all right. Honeywell is still looking okay. So it's one of those areas where some of the big names are really kind of ugly within this space. So I do think we want to be careful. I definitely think I need at least a day of confirmation on the ETF as a whole. The price has me very interested. I'd be lying if I said otherwise. If I start to see some sort of price appreciation off of this around $77 mark, I am going to be very interested in certain areas. I'm going to not be trying to guess the bottom on 3M or UPS or even my old friends CAT. They're kind of off the board short term, at least bullishly speaking. At least for me, looking at this, even a deeper pullback, it would concern me. I would call it a short-term bearish signal, but not necessarily broadly turning on the sector level, because of this swing low down here. I think we can use this as our primary level of support at $75. So a pullback really above that can be interesting to me. Maybe, hopefully a dull couple of days, let these earnings shake out, because there was some really negative movement in so many of the big names within this space. And that does have me at least a little bit concerned on an area that I still really like. If we can hold that 77, I think that is going to present an interesting opportunity for us. But I have a little less faith than I'd like to have, to be honest, with how ugly some of those earnings were. But again, just because I think those charts are hideous, and probably a lot of you do too, doesn't mean longer term buyers aren't saying, hey, that's a sweet deal on 3M. Let's go get us some. I can't imagine me saying that, but it takes all sorts, right? So a little more selling over in the tech sector today than we're accustomed to. And when I say that, I mean, we're basically down 0.03%. So nothing really to see here, as it continues to be a very strong area. Like I said, I've said this a few times, what can I say that really, I mean, you said it best, Marcelo, it just keeps going up, above everything, above highs. So many of these companies are looking strong too. We still have some earnings coming around that might impact it. And they can. And that's why, you always have to, at least mentally prepare for a little more increased volatility on your directional trading during your earnings season. Not specifically for the stock, because, well, I'm not going to hold a 3M through earnings for better or worse. But we saw that, in Facebook, with the communication services, we saw it in the industrials, where those earnings kind of beat up that whole sector. Really, even though the whole sector, not so bad, but some of those earnings really can have at least short-term negative impacts or positive impacts if they're going the other way. So maybe that is something to keep in mind as we work into these tech earnings throughout next week. But I mean, really, it just continues to be a great place to be. Hard to see how anybody wants to be bearish. An interesting little pullback developing here over in the staple sector here today. Yeah, Microsoft, they hit $1 trillion. They hit $1 trillion market cap. I didn't do the math. I'm just assuming that Matt knew that Matt and Cody did do the math, or found someone who did the math. But I think it hit $1 trillion market cap today. So hats off to you, Microsoft. Never get the respect of the other big companies for some reason. But yeah, you've had a longer term position on those on Microsoft, haven't you, Matthias? I think I saw that in the halftime report today. Yeah, that's a nice trend on Microsoft. We'll take it. Let's go take a peek at them really quick. Certainly a nice positive movement on the. I thought you said that you were in there. So yeah, hey, we'd love to hold the trade on earnings on Microsoft. The problem is to get a Microsoft, again, for an investment, I have no objection to that. It's a much different school of thought. So certainly can understand where you're at there. Be interesting to see how it kind of. Very good. Be interesting to see what develops in the days to come. Can be a little to trade into some of these, gaps. For me, at least, I like to trade into gaps like the 3M, where it gaps right, into that support level or resistance level. Or Cincinnati Financial was another one. If you're ever trying to intraday off of these earnings, I think what you should look for, because it's so hard to read, and there's a lot of ways to go about it, but the way I do, and sadly I did not do anything with Cincinnati Financial, but boy, I wish I did, is watch for that earnings. So let's just throw on our resistance level here. Yeah, there we go. Live and in person drawing lines. You'd think I'd learn my lesson, but no, I won't. So on the intraday, maybe let's go into the 15-minute time frame. Breaking out, of that resistance on the first candle of the morning, on that earnings beat, and then looking for opportunities. Now, on the 15-minute chart, I mean, these guys basically just screamed up the charts all day long. So, maybe I'm not feeling too sorry. I don't see how I would have probably even got in if I were staring at them. Although I'd like to think I'm perfect in hindsight, probably didn't miss out because I probably couldn't have done anything there. So, but a very nice, that is kind of what I will look for if I'm looking for those short-term post-earnings plays, things that are gapping into support or resistance and pushing through, giving us that signal on the longer term with the momentum behind the actual earnings itself. So a little bit of a tangent there, but Microsoft takes us there, and that's all right with that. So yeah, I'm used to it, Marcelo. I'm terrible at drawing lines. I'm not, if I was embarrassed by it, I got over it a long time ago. So an interesting price over here in our staples, working back and showing a little bit of a hammer candlestick, much like the market gapped a little to the downside here today, forming a nice little hammer at that old resistance level. I need another day, but a little bit of upward movement. I think this could be very interesting. We, of course, still have to contend with this resistance level, and I think we can look at these highs that we put in here this past week, just right around that 57.15 marker. As kind of the top, because again, we've got this 57 zone that we've looked at. I think we can call that our breakout point if we can take that out. At least that's how I'm going to be looking at it. Nice little hammer candlestick here today, showing buyers are still very interested in this sector, and I think they probably should be. I do believe that this will be one of those areas that I've got a few in the watch list for next week after I do some scanning here. But really love the hammer at that old resistance right between that 9 and that 20 SM, 9 exponential moving average, 20 simple, pushing back up a little bit. Not a particularly textbook pullback, but we got the pullback. And so much like this one back here, we have our opportunity developing. We'll see where this one takes us, but it's a good start in my mind, at least. A little bit more upward movement over in the utilities, and that's definitely nice to see. I didn't want them to break 57. I had, of course, I'm not really interested in them right now. They're kind of working into the top of this range. It's going to be an interesting fight, I think, for me, at least at this point. I'm still want to see it break out. It still looks sideways. We came off of support. That made a lot of sense. We looked at that weekly chart, and at least in my mind, looking at that weekly chart earlier in the week made a lot of sense. Breakout, pull back to the breakout point. So I still am looking at this kind of as a bigger picture consolidation on top of the breakout. Personally, a break above 59, a pretty good signal. If we can kind of pull back, create a higher low, and then take another run, maybe there could be something interesting there. But for me, I'm really unchanged, but it is nice to see a little bit of upward movement back into the middle area within this trading range. But to me, still very much in a trading range. Over in healthcare, we rallied up. We had that little doji yesterday, but really wasn't able to build off of that. As we saw on that heat map, for the most part, this was a pretty green sector here today. I don't think that's a bad thing. I think we actually want a little bit more of a retracement. Looking at the weekly chart, we basically working back into that 89, which is where we have, that net. We took out this little short-term resistance level today. I think you have to say it's a little bit of a bullish signal. Certainly in my mind, not a great trading signal, but a little bit of bullish momentum to break through that resistance. This one right here at 89, that's the one that should be an interesting fight. We'll be working into. So yeah, and that's why, I always want to get that confirmation, as Marcelo, that that was a good start and the pricing point did make sense. But that's why I always am willing to pay for that confirmation at the expense of quote unquote missing out personally, because it's just such an easier, it's just so much easier mentally, right? I guess if I was always aggressive, it probably would be okay, but so much easier for me to take a little bit more of a, conservative, get that extra confirmation. If the risk to reward's gone, wish everybody the best. Because you'll get your shot. But we did take out a little bit of resistance here today, did close above that 9 exponential moving average on the daily chart here today. So a little bit of bullishness going on. And again, for me, I'm still looking at this primarily as a bearish retracement for, across the board within the sector. This 89, this is where I want to test. This should be a little bit of a fight, I think, from a resistance. Certainly a lot more history here on the weekly chart, much stronger level of resistance than this little level that we broke today. But hey, at least for today, good for you, sector. That's okay. That is perfectly fine with me if you want to rally up a little bit more. But still, lower highs, lower lows. Not interested. Big picture from a buying perspective within that healthcare sector. It's going to have to do a little bit more than that to get me to start to think about being a buyer. Over in discretionary, much like the broad market, dipped down towards that rising 9 exponential moving average, popped off of it on the intraday, closing in the red. The market is, fighting. We talked about this a few days ago after that nice big pop on Tuesday. We are just, a lot of things are extended in that resistance, and it's just the battle that, we probably should have expected, not known, right? Nobody knows that by any means, but with things at resistance, a little bit overextended in the middle of earnings season, it makes sense why, to me at least, why things are taking a pause. And I think that is okay. I think that is a great thing, really. If we can get that break a week from now after earnings season is done, that would be great in my mind. But a good solid day over here. We have Starbucks, of course, Amazon reporting. So this ETF, depending on how those companies respond to their reports, may look a little bit different here tomorrow. Both of them certainly are big players within the discretionary space. Over in real estate, just a day of hanging around, closing above the 50 today. I'll give that a positive, a little bit of a okay, but still don't trust it. Don't really like it very much at all. But if I'm thinking about this chart from a buyer's perspective, at least aggressively speaking, if I can take out this resistance, because right now it looks like we had a breakout, we had a fake out, we're working back into that. So now, if we can push back through that, probably can get some buyers, at least short term, ready to take another run at resistance. On the other side of it, if we do end up breaking down, that's going to look an awful lot like a head and a shoulders pattern to me if we do end up taking out this support zone. I'm still on wait and see with these guys. I'm not really interested one way or the other. If I am trading it, I'm making sure I'm finding things that are in very good trends, that matching that bias, whether it's down or up. Still just a little too choppy, a little too rocky, I think a little too undecided. If we can break through this resistance, I do think you call that a little bit of a bullish signal, and I would understand a little more of a bullish attitude than I'm going to have with it, but I'm not there yet personally. If we can take that out though, there's really not a lot of resistance, and some of these things have recovered nicely. Just I still don't trust it, I guess, is what it comes down to. I know I can't be bearish when I look at those technicals, but I don't want to be bullish when I look at those technicals, so I kind of have to sit it out. Of course, Facebook has the gap up on the open, and as we all know, Facebook is a very big influence on XLC as we continue to work through earnings over here. Really nice gap to the upside on an okay report. I don't think it was a rock star earnings report, but an okay looking report, I suppose. We'll have to, again, this is a tough one. New trades on this, I'm not sure what you do with that. I don't think you do anything if you follow my methodology, but a good solid gap to the upside. Again, we still are working through some earnings with some of these companies. Many of these companies were recently in the tech sector, as you guys know. So we'll have a fair amount of earnings in this space in the next week, week and a half as well. But we are, nice solid upward appreciation. There's really, at this point in time, we've got this 51 level of resistance and the high. So really not a lot of resistance within this area. Now we've made it through Facebook. Now the next big one is Google here next week in the communication services. So trend still there, flying pretty high on the ETF. As always, I look to these as individual components much more than I want to go buy the ETF. Although in hindsight, I should have just bought the ETF a couple of weeks ago when it broke out and been feeling pretty good about things, right? So we're all perfect in hindsight though. So a little bit more of the same for the most part. I've got a little bit of concern in the industrials and the materials, but they haven't broke support yet. They didn't get, I don't like their price movement today. That does concern me, especially on the industrials. but let's see if support can hold for us before we get too crazy over there, I think. But I did like the industrial sector. I'd be lying if I said I didn't like it more yesterday than today. And it's not the technicals. The industrial technicals, again, I don't like how it got there, but it doesn't really bother me that it is there. It's just so many of those big names have been disappointing on earnings, and that is a little bit of concern. That's probably going to get me off of them a little bit going into next week. But tomorrow's candle is going to be critical, I think, for how I'm viewing this sector going into next week. Any sort of a fight, I think I'll be looking for retracement candidates very happily. Falling right through it, I'll probably be saying, yeah, I'm just going to let this one kind of simmer, simmer for a minute or two. So we will have to see tomorrow if we get that what we get. There's not much going on in the VIX here today, pushing up just a little bit. But again, right now, flat for the most part on the broad market at resistance, and just a little bit more of the same over in the VIX. Over on the dollar, we were able to carry on a little bit of momentum off of that break yesterday, which I absolutely think is a very good signal going into the future. As those of you who know me know that it's always that follow through, right? Break resistance, break support, and then give me that follow through because that's what sells me. Not always for tomorrow, but just going forward, much like Matt said in the halftime report, I'm completely on board with his line of thinking when it comes to the dollar, and that's why I've been, so long. I've just been waiting for it to come out of this trading range. This isn't so much for today or for tomorrow; it's for the next month to several months on the dollar. This is a pretty major breakout off of a pretty long-term support level. If I forget about what this ticker symbol is, and this is just a chart on Apple, on Disney, on Coca-Cola, whoever it might be, I love this chart, and I'm probably really excited to look for bullish opportunities. So that is where I will be, really as long as we're holding this breakout point. I mean, I wouldn't fault anybody as long as it was within the rules of their trading system for playing it on the bullish side of things. Certainly, that follow through definitely a good sign in my mind going into the next potentially couple of months. Honestly, I expect it to try to work into the 100, which might not seem like a lot on the dollar index, but those of you who do anything with Forex know that can be a little bit of a move. So we'll see how that one goes, but definitely a good start, breakout, follow through, pullback. I know Cody loves the break and the pullback, and it's a lot easier to get that, I think, in maybe the futures or commodity market that do that. But that's just my opinion. I've never done any study on it. Just seems that way. Another back and forth day over on gold. Tried to work above that 1280 number, which is at least I think a little psychological number. I don't think it's tremendously important right now, but got knocked back down, just continuing to consolidate right under that breakdown point. Just hasn't really decided. I mean, it's a pretty bearish chart, I think, if you think about it. Maybe it wants a little bit of retracement. You look at this weekly chart, we are making lower highs and lower lows, so I still think you keep that bearish grade on it. Still have a hard time wanting to buy any bullish signals at this point, but it really has put up a very good fight off of that break. We had that one day that we sold off pretty heavily on the intraday, but maybe this is just a little bit of bearish retracement. I still lean to the bearish side. I think you have to, more importantly than that, I think you have to lean away from the bullish side. So whether you're wanting to trade this or not, I don't really have, that much of an opinion either way. If a lot of traders don't want to go short gold, and so I understand that side of things. And if you didn't want to, I'd get it. But I have a hard time seeing why someone would want to buy it, at least right now. Over on silver, another doji working into that little, I can't remember what Noah calls it. It has a clever word, but I forget what it is. Trend line, the 200-day moving average, the following 20-day moving average. Once again, we're putting, just like we did back here, we're now 3 days in a row where we've put up these higher lows. So if we sneak in here on, say, an hourly time frame, we're kind of develops, don't want to move you. We're developing this little upward trend, working back into that resistance zone. I would expect if and when this trend line breaks, much like we saw when this one broke, we'll see at least a little bit of a short-term move to the downside. And in this particular case, I think that could be a very interesting signal. I would love a little more, one more day of making a higher low going into next week, get us a little bit closer to all of this stuff. This, all of these moving averages, this trend line, that old $15 marker. Let's not forget about that one right there, because that has continually pushed us down. One thing I think we can say is folks continue to look from an intraday perspective for sell signals once it approaches or gets into that $15 range. So not a lot of change here today. I still think we need one more day, but again, it never hurts to ask. One more smaller doji tomorrow, creating a higher low, could make for a really interesting trade setup on Monday. We'll see if we get it. I do expect if that support line does break, there is some selling, might just from at least a short-term perspective. The metals have held up a little bit better than maybe some people thought they were going to after breaking these support levels, but they haven't done anything right, just more they haven't done a lot wrong. And if the dollar is going to continue to run, I have a hard time seeing the metals withstanding that for an extended period of time. Over in natural gas, just continuing to do the 2-5 dance, right? I talked about it. I'm not sold. I do believe that now the break, we looked at these, the intraday low yesterday and the floor that it built the last 2 days. We actually tested that intraday floor zone here again today. So I think that is where the confirmation is I think we need to break below this before we confirm the break of this 250 marker. You guys know me, I'm conservative. I'm not 100% until, basically I need to see it, right? I don't think you can call this a breakdown just yet. I think it's just way too aggressive in my mind to call it that. So let's see how that weekly candle closes, because again, it's the same philosophy on a larger time frame, right? A close is a close is a close. We're doing the dance. I still expect it to be hard. And if you made me guess with it pushing through the 250 already and these falling averages, I'd probably lean towards the downside. But I think if I'm looking at a swing trade, bearish swing trade on natural gas, which probably am not, but if I am, I'm probably looking at breaking this 3-day floor as my entry. I'll call that confirmation. Trade or no trade, I will call a break of that floor confirmation on the break personally, but I need to see that before I'm really going to call it a break. I get it. I wouldn't fight too much about it with somebody who already said it did break down, but that's just too big of a zone, and that always concerns me. I'm a wimp, though. You guys know that. So, and lastly, over in crude, little more selling here today, sneaking into an intraday. Let's just go into this hourly here really quick. Crude's been fairly consistent, working up. And so we do have this on this hourly time frame. If we do work back into this 64.75 range, this should be a really interesting price point. We've got a lot of history of resistance there, right? That was our most recent breakout point. We also have that 200 hourly simple moving average, which, while not necessarily the hugest deal in the history of deals, certainly can also act as a support catalyst, in my opinion. So this could be an interesting price point on the intraday if we do continue to work towards it. As you can kind of see, we took out some of that intraday support here today. And that's where we saw really the majority of our selling, was when that we took out that intraday. Yeah, that's why, Marcelo, I don't draw live and in person. I can't do it. When we did take out that intraday low, that's where we saw most of the heavy selling. So it makes a little bit of sense. We made some lower highs, taking out a little bit of support on this 1 hour time frame, of course. So I'll be looking for that pullback. If I'm looking at this from a intraday trader's perspective, this price point will definitely have my attention. There is a lot there to hold us up. If I'm not looking at it from that point of view, and I can, maybe we see a doji at that price point tomorrow, and then maybe a swing trade can develop for us on Monday, right? Still looking at it from a pullback, still looking at it through, of course, bullish eyes. Do expect that it will, create a higher low. I think we can call the higher low this 63 marker personally, and maybe don't agree, but that's how I'm going to be looking at it. That's going to give us the 20 simple moving average. That should be, although I didn't look, that should be giving us the 9 exponential moving average. Now, nope, he's not caught up yet, has he? Wow. No, he's still got a ways to go. So we won't get that 90 MA, unfortunately, but I'm perfectly fine with any pullback, honestly, within crude, as long as it's on the other side of things. We can look at the break. While I initially had 67 kind of as that next level of resistance, with the way that it has been behaving, if we do break out to the upside, I think that any break to the upside, it's not particularly pretty, but I'll call it that. We probably need at least one more day. I mean, anything could happen tomorrow, but if we can take out that 66.50, I think that could be interpreted as another buy signal as well. So I still am looking at this just through bullish eyes, not any interested in bearish plays right now within crude. I think the type of thing that if I had to, I could go buy a buy USO, because I don't like to really swing trade the futures contracts. They just move too much for my wimpy tastes. But if I had to, I'd be comfortable just buying it and just letting it go if I absolutely had to. So still looking for buying opportunities in crude when I get them. We're seeing some things on the intraday that could be developing in the next couple of days. A nice little doji at 60, at this breakout point around 64.75 would be all right. If we're asking for things, let's ask for that. That'd be very nice tomorrow. So there we find ourselves, ladies and gentlemen. Busy earnings season. As you guys know, market's still battling at resistance. It hasn't picked a side. Still, the signals are still predominantly to the upside across the board. I mean, really only healthcare is still within those, in those bearish, zone for me, at least as of right now. We will see if industrials and materials can bounce back before they get put into timeout, if nothing else. That was a rough report, a rough round of reports. Let's see if I can say that on those industrial stocks. So maybe somebody can, just get the hope back up going on in that sector. Doesn't take me, right? 3M, somebody might buy it just because it's not me. I wouldn't dare ever do that, but it takes all kind. We'll see how that 77 area holds up. That's going to be the fun one tomorrow, I think, from a sector perspective. So, ladies and gentlemen, that is going to do the market recap. But as always, it is certainly my pleasure. I do appreciate everybody's time. Thanks for hanging out with me, going through the routine. It is always more fun to do this with you guys than on my own. So thanks for hanging out with me. Of course, if you are new around here, be sure to subscribe to the channel and hit that notification bell. You can, of course, join us over on Twitter at Tackle Trading. You can find me at Tackle Trading as well, over on Twitter at Frank Martin 23. Yeah, I'm not at Tackle. Well, I am at Tackle Trading, but I'm at Frank Martin 23 too. So, hey, thank you, Matthias, Marcelo, Marie. You're very welcome, guys. It's certainly my pleasure. We got the Cash Flow Club going on tonight for our pro members, so enjoy that. I will not be partaking in any more trading activities. It is time for me to go get some barbecue going for the NFL draft. So you guys are going to have to work hard, because I am not going to be working hard the rest of the day. So, but I will look forward to seeing you guys same time, same channel here tomorrow afternoon. Of course, if you're not a pro member, you know the drill. You're always welcome to come on over. Let us get you set up with a 15-day free trial. Give it a try. Go have some fun in that Cash Flow Club. We certainly know how to have fun and get some work done here, I think, at Tackle Trading. So thank you guys so much. You guys get out of here. Have a fantastic, it's a draft party for me is interesting, to say the least, because it's mostly just a bunch of dudes hanging around, yelling at the TV, eating brats. So not for me at this, not tonight, Mike. I'm not really Amazon. I don't really feel like there's a great feel on it. Starbucks doesn't tend to be a predominantly huge mover in my mind. So don't think there's any great earnings plays. And again, that's just me. I'm picky on earnings plays. I'm not, I'm not a primarily earnings trader. Personally, I will do it. I'm very much open to it, but I'm also very, you know me, Michael, I'm very picky. I'm very conservative. I basically love you or I'm not doing anything. So my general philosophy. So Yeah, well, if you are a football fan, hope your team drafts a good player for you. I'm a Bronco fan, so we will see. They do a pretty good job usually. We'll see how that one goes. So, all right, ladies and gentlemen, get out of here. Have a fantastic Thursday afternoon and evening. I will see you same time and channel here tomorrow for our Friday recap. So, thanks a lot, guys. You guys have a fantastic night, and I'll talk to you tomorrow. Bye, everybody.